Hello, guys. Welcome to another session. Recently, discussions about India's economy have been intensified. One of the key reasons for this is the record-breaking trade deficit, which is 37.8 billion in November. This is the highest deficit ever recorded in a single month in the history of India. So, in today's session, in this session, we will break down what's happening and why this trade deficit is alarming and what's its implications for the Indian economy from gold imports to global trade trends. I'll try to cover everything you need to know. So let's start the session. And before that, in case if you're looking for any civil service mentorship program or the courses, I've given the details in the description. Please check out that also. So let's get started. Let's try to understand what is trade deficit and why does it matter. See, it's very important to understand the concept of trade deficit. A deficit occurs when the value of countries' imports exceed the exports. So imports is more than the exports. So import minus export, that is the deficit. Or if you take export minus import, if it is negative, that is what you mean by deficit. If it is positive, that is what surplus. But we have negative, right? That's why deficit. For example, if we talk about in terms of numbers, let's say exported goods worth 32 billion and imported worth 70 billion. So what's the difference? 32 billion is the export and incoming is 70. So let's say 70 minus 32, which is coming around 38. That's what 37.8 billion difference as the trade deficit. Now, why is this significant? Because if you see a growing trade deficit means India is spending more on dollars on imports than it earned from exports. So this directly impacts the strength of Indian rupee, which has been depreciating steadily. So almost touching $85 per dollar in the past year. So see, if you see when we import, we need to pay in terms of dollar, right? So demand for dollar is high, but supply is less. Supply will come from exports. So demand is high for dollar, supply is less. So in the market, what will happen? The dollar appreciate and rupee depreciate because the demand for dollar is high. So if you look at the November spike, let's try to understand what happened in November. Let's examine this number closely. In November, India's exports dropped from 39 billion in the previous month, October, to 32. So here, export have reduced to around 7 billion, but import rose from 66 to 70, which means 4 billion import increased, export decreased around 7. So that itself, contributing 11 billion increase. So this combination of declining export and rising import widen the trade deficit sharply. See, when export is decreasing, that is acting against us. So that's what happened here. Export decreased by 7 billion. Import increased. It should decrease, right? But both side it is reversed, which is happening. So that way it contributed. And one surprising factor was the surge in gold imports, which doubled from 7 billion in October to 14.9, around 15 billion in November. So this was driven by factors like the festivals and the wedding seasons and India's cultural preference for gold as a safe investment also. Now, let's talk about the gold effect. It's more than a cultural phenomenon. Indians have a deep-rooted attachment to gold. During uncertain economic times, people often turn to gold as a hedge against inflation and financial instability. For example, if you see in 2013, when India faced a severe economic crisis with depleting forex reserve, gold purchases surged dramatically. To curb excessive gold imports, the government introduced sovereign gold bond scheme in 2015. So this scheme allowed people to invest in gold digitally, earning interest without needing to keep that physical gold. So it reduced the physical gold import, but rising gold price means the government had to pay again higher interest. That is again making the scheme less sustainable from the government side also. Now reports suggest the scheme may discontinue soon. Now, why does this deficit is a concern now? See, a high trade deficit is not always bad, okay? But if imports are like, if you talk about, trade deficit, when can it be considered as fine? If imports are raw materials or machinery for manufacturing. Why? Because they contribute towards economic growth. Because you are importing raw materials, so you will be making the finished product. You're importing machinery, so you'll be again making a finished product. So that will overall promote the economic growth, right? Importing equipment for automobile factories can lead to increased production, and that you can export later. So whatever deficit which is coming now by importing raw materials or the machineries, you can export back with more value added. That means export will increase later. But if imports are mostly finished goods, like textiles or luxury items, they create long-term dependency and hurt the domestic industries. Unfortunately, if you see, India's growing imports include items like fuel, jewelry, and electronics. That is widening the gap further. So let's also look at India's trade partners, the deficit and the surplus game. We'll try to understand with whom we have surplus, with whom we have deficit. See, India's largest trade deficit, or India's trade deficit is highest with countries, of course, with China, Switzerland, Saudi Arabia, and Iraq, largely due to import of fuel, machinery, and precious metals. On the other hand, India enjoys surplus with countries like US, UAE, and Vietnam, where export of IT services and other goods, actually help us and which outweigh the imports. Interestingly, if you see, India and UK are negotiating a free trade agreement that could impact this dynamic. Such agreements often help to reduce the tariffs, making trade more balanced between the two nations. Now, see, what about this crisis? Is it a warning sign or not? That's what we need to answer now. See, the current situation is not a full-blown crisis, but the numbers indicate a warning signal, right? A rising trade deficit, declining exports. So here, if you see, rising trade deficit is not only because of increasing import. Here, there is a concern, which is declining export. Increasing import to an extent, okay, but declining export is a big concern. And weakening rupee, that require immediate attention. Policymakers must focus on strengthening domestic industries, diversifying export markets, and reducing dependency on imported goods like fuel and gold, right? Additionally, if you see, global factors like inflation, geopolitical tensions are also influencing the trade. India must navigate these challenges very carefully, and then only we can ensure the economic stability. So India's trade deficit now highlights the importance of strategic economic policies, encouraging local manufacturing. You can promote exports, and managing imports are very crucial if you need to sustain, or have a long-term growth. As we move forward, let's see, understanding the trade deficit and its components help us to understand and grab or grasp the bigger picture of our economy. So let's keep a close eye on these trends and work towards the solutions that benefit everyone. So that's about the session, guys. Thank you so much for watching. If you find this video informative, don't forget to like and share. And you can comment below your thoughts about this topic. And in case if you're looking for civil service mentorship or the courses, you can get in touch with us, or the details you can see in the description. See you in the next video.